Welcome to the Premier Realty Group video podcast. I'm your host, Kelly Green, the marketing director for Premier Realty Group of West Tennessee. We have offices in Paris, McKenzie, and Huntington. My co-host today is our owner. She is also our principal broker in Paris, Susan Bradberry. How are you?
Good morning, Kelly. I'm doing great.
We're going to talk closings today, and we've got just the person to answer all the questions.
That's right.
She is Ellen Neese Adams, attorney at law with Neese Law Firm of Paris. Ellen, how are you?
I'm doing well, thank you.
Thanks for being here today.
Thanks for having me.
Susan, start us off here.
Okay, Kelly. Ellen, as you probably know, a lot of our clients, especially if they're first-time home buyers, may never have been to an attorney's office.
Right.
And as much as we like you, that can be pretty intimidating for them.
Yes, it can.
I thought maybe you could give them a certain comfort level by first just explaining what is a closing.
Sure.
Why do we have a closing?
In the simplest form, a closing is simply where the money for the purchase of real estate changes hands and title to that real property is transferred to the new buyer. And the process of doing that closing is as simple as coming in a waiting room, then into a conference room. If you have a realtor involved, which we encourage everyone to do, they'll be by your side. Our office staff, attorneys, title professionals will walk you through every document you have to sign. Typically, at the end of that closing, you'll get the keys to your new home.
So as a buyer coming to the closing, what do I need to bring, or is there something I need to bring? As a seller, is there something I need to bring?
Sure. So one of the most important things in this modern age of rules and regulations is that we need photo identification. And so 2 forms of identification, 2 forms of photo identification, if you have it, is going to be needed. The other big thing that we need everybody to bring is obviously any money they need to bring to the table, whether it's purchase money, earnest money, a fee that they're going to pay. So all of the money, if we haven't received it in advance of the closing, we need it that day. And then as the seller, if you are transferring property possession that day, you would need to bring keys, garage door openers, the little things that you actually need to just be done.
Right. Well, as a buyer, can I just write you a personal check at the closing for the monies that I need?
This is sort of the new world we live in, and the answer is absolutely not. We cannot and are not just our office, no title company should be accepting or is allowed to accept personal checks anymore. And the reason for that is at closings, we have to have what are called either guaranteed funds or certified funds. Different terms are used, but that means real money. So preferably, that would be in the form of a cashier's check made out to the law firm or title agency you're using. Wires in advance are fine. Some title agencies will accept cash. It depends on the amount. Often if somebody wants to bring a large amount of cash, we have to do that closing at a bank so that it can be properly counted. But the best way to bring your money to a closing table is either to wire it in advance into the account of the closing agent or to bring a cashier's check.
Okay. And you mentioned rules and regulations, and a few years back there were a lot of new rules and regulations that came out.
Right.
And one of those was when a buyer is to be notified about their closing numbers.
Right.
And that's I think that's great, because I've gone to closing tables where we just found out at the closing table.
Right.
The closing disclosure. So can you talk a little bit about closing disclosure?
Sure.
And when they're supposed to receive that?
So what we used to always call our documents at the closing table used to be a term called a settlement statement.
Mm-hmm.
That's what most people who've done a home purchase in the past would be familiar with. What the equivalent of that document is today is called a CD, or a closing disclosure. It's typically a 5-page document, and it serves the same purpose as a settlement statement in that it shows the amount of money borrowed from a bank, the purchase price, interest rates, all of the fees that it took to transact this property, insurance, taxes that might need to be paid, even pest control type bills. It's all laid out on that closing disclosure so that everyone can understand exactly what they're paying and for what they're paying. It will show how much money a buyer needs to bring, how much money a seller needs to bring if they need to, or how much money a seller is getting at the end of the transaction. And it lays all that out. In an ideal world, and according to the new rules, we would hope that our buyers who are going through a lender would have those final numbers 3 days in advance, 3 business days in advance of their closing. Unfortunately, that's not always the case, and there are differences. Every closing is a little different. That's the ideal, would be 3 days, but the minimum is to give folks time to get those certified funds to their closing agent.
I guess the closing is pretty much the last stage of the home buying process, but that doesn't mean it's a guarantee, right? Things can go wrong at a closing. What are some common errors or common mistakes that people make that cause the closing to not close, so to speak?
Great question, Kelly.
Sure. I think the root of most of the problems we see at closing tables, though they are rare, they truly are, come from people not either acquiring or being provided the proper information in advance, and then sort of being taken off guard at the closing table. And as a closing agent, we try to prevent that. We certainly see less of that when real estate agents are involved because they have that conduit to information. But again, if you are buying a home and your closing is tomorrow and you still don't know how much money to bring to the closing table, you haven't reviewed documents, you have questions, ask them now. Don't wait until you're at that table. We're accessible by phone. Your real estate agent is accessible. Getting some of those questions, because I think when you're sitting at that table and faced with signing a document, sometimes it makes a small issue seem a little bit bigger than it is.
Gotcha. I guess both buyer and seller are required to be at the closing.
Sometimes.
Okay.
We do have sellers. There might be a circumstance where someone owns a property locally and they live out of state, in which case we mail their documents to them. Vice versa. Sometimes we have that with buyers. So it's not always the case anymore that buyers and sellers sit down at the same table at the same time to sign their paperwork.
So in this day and age, you could do it all by Skype if you needed to, right? With electronic signatures and wiring money.
Tennessee Register of Deeds, there are areas and counties that are now doing electronic signatures, etc. We feel like that's still a little bit new for where we are. We prefer that we just mail people or email people documents. They can overnight them back to us, use a notary public in their area. But certainly, especially in the more metropolitan areas, we are seeing video closings, not necessarily Skype, but some form of electronic video closing. Remote closings is what they've typically called them, is remote.
Gotcha. Susan?
Another thing that can be intimidating for buyers when they sit down at the closing table is the stack of documents that you have in front of you for them to sign. So can you kind of give them an overview of the documents that they'll be required to sign?
Sure. When we have a cash closing, those are obviously very simple. Someone's paying in full, a lender is not involved, and the document load is very small. When we have a loan involved, the amount of documents that will need to be signed vary by lender. Each has their own special set, but what you will have, no matter what, in any closing where there's a mortgage involved, is that closing disclosure form that lays out all of the elements. You will sign a promissory note, which is essentially your contract with the lender that says you are borrowing X amount of dollars at a certain interest rate and promising to pay that back. The other thing you will always sign is a deed of trust. That is the document that's recorded at the Register of Deeds. That is the document that takes your promissory note and essentially makes that a lien against the property. It secures the money you've borrowed with the actual real property. And then, of course, there's always going to be a deed where the seller will sign and actually transfer the title of that property to you as the new buyer.
Right. And while there are fewer documents for the seller, there are documents for the seller to sign. So
absolutely. So with the seller, we'll see the deed. Often we need property disclosures if they haven't been done. Perhaps there have been issues with repairs or pest issues, and sometimes we get those final documents signed off on at the closing table. The seller will also sign, at least in our office and in most, some form of a settlement statement to show that they understand exactly what they are getting back and what fees they paid as their side of the transaction as well.
Right. And talking about those fees, when am I going to get my money? That's probably the thing that most sellers are really concerned with.
Right. And again, every closing is different. But for the majority of closings, we're able to exchange funds at the closing table, meaning when all the documents are signed and finalized and notarized, we're able to hand everybody their check, essentially, at the closing table. There are times where that's not the case. Perhaps there's a rescission period or a waiting period due to some regulation or an agreement even between the parties of some sort. But typically speaking, there's usually no reason. Once all the documents have been signed, everyone should be able to receive their money that day. And we are seeing more and more folks asking us to wire money into their accounts in lieu of actual checks. That it goes faster. There are a lot of regulations, especially if it's a large amount of money, that they kind of have to be held and cleared properly through the banking system. So we're happy to wire. I think wiring is becoming more of a commonplace occurrence, but certainly our typical is at that closing table, checks are distributed to everybody who's owed a check, and it's done when you walk out the door.
Gotcha.
So you're saying that if you wire them their funds, the funds then will be available to them sooner than if you give them a check at the closing?
Typically, especially for folks who bank out of town or
Right.
long distance, they've got to then transport that check with them.
Right.
To deposit it back at home, wherever that may be.
Right.
So, for anybody who doesn't bank locally, that's certainly an option to really consider.
And most banks would then charge a wiring fee. So
would.
that fee will show up on their side, the buyer side
Right.
of the...
And
of
it's pretty nominal,
yeah,
especially when you're
20.
talking about depositing a check for hundreds of thousands of dollars
Right.
potentially on the sale of a property.
Right.
You might not want to walk around with that in your pocket for very long.
Right.
Right. Exactly.
All right. We're talking with Ellen Neese Adams, attorney at law with Neese Law Firm of Paris. 2 questions. Where does the closing typically take place? Your office, the bank, a real estate office?
Yes to all of the above.
Okay.
There are some lenders who just prefer to do those things in their offices, which is fine.
Mm-hmm.
We travel there to do that. And we do probably a majority, I would say, now in our office, just because with all of the new rules and regulations and the volume of paperwork that has to be printed, if something were to need to be edited or changed at the last minute, we can facilitate that typically easier in our office. So that is sort of our preferred, but certainly we've done closings at every real estate office and every lender that we work with. So,
And I'm sure every closing is different, but typically, how long does a closing last?
if it is a cash closing, we'll be in and out in 30 minutes the whole show,
Right.
because there aren't all those documents. When you get into 100+ page piles of paper from lenders, an hour.
Okay.
And also you've got to remember a lot of that's not just signing. People are chatting. They're exchanging information about, especially if it's a home.
Right.
Realtors are exchanging information. Copies are being made, etc. Should be a pretty laid back process, truthfully. It shouldn't really be an intimidating lawyer's office type of meeting. It should be something where, maybe the buyer and seller have never even met before, exchanging questions and information about the property that you may want to know. It's a great chance while we're preparing documents and copies for everyone to get those questions answered before that person is gone. So we really encourage everybody to take a minute, sit, discuss, and ask questions as they need to.
All right. Any final questions for Ellen?
I might have you address, Ellen, the issue of liens, because we have buyers that, are like, okay, what if they owe something on this property? Am I going to get stuck with that?
Right.
And sellers should know, too, what's going to happen with any liens that you might find on the property during that title search process.
So any lender is going to require what's called a title search, which is a search of the ownership history of the property, and that includes liens or taxes, monies that might be owed that are secured by that property. If you are doing a cash purchase, it is highly recommended, and I think it would be foolish not to pay for that title search as well. It makes sure that the person who's selling you the property is the true owner of it, that we have all the right signatures on the deed. It tells us if any banks or any individuals have a lien against the property. It could be something as simple as an air conditioning unit that's been financed, up to a mortgage, up to a tax lien for a failure to pay taxes. So we search all of those things, and part of the title process is figuring out exactly what's owed if there are any liens, the balances of that, and all of that will appear on your settlement statement. All of that will appear on your closing disclosure forms, and everybody can see exactly, and that'll ultimately dictate what the seller gets back, because it's our job to make sure that when you buy that property, you are buying it what we call free and clear, meaning there are no liens, there are no debts. Everybody understands that once you buy that, the only debt against that property is whatever mortgage you're putting on it.
Right. So if you do discover liens against the property, those get paid at closing before that seller gets any funds.
Yes, that is the primary purpose. Next to making sure the right owner is transferring the property,
right.
The next purpose of a title opinion, a title search, is to determine if there's money owed against it, and if so, to get it taken care of, paid.
Right.
All right. Good deal. Ellen Neese Adams, attorney at law with Neese Law Firm of Paris. Thank you for being on the podcast.
Thank you for having me. This is great.
Terrific
and I
job.
think if our listeners will listen to this, then I think that will ease some of their anxiety about coming to an attorney's office and about coming to a closing.
We hope so, because overall, we're there to help and answer questions and make it a better process. And I think people should just not be afraid to ask their questions.
Yeah.
There's no silly or dumb questions in this process. They're all legitimate,
Make it a really fun and exciting experience.
That's right.
Yeah. Good deal. Thanks again, Ellen.
Thank you.
And thank you all for watching the Premier Video Podcast.